Welcome to the second session with BPO specialist Alistair Niederer. I'm John Williams, the CMO of the Instant Group. And today we're going to talk about unlocking the strategic value of proactive workplaces to drive business success. So global brands, whether they're outsourcing or relocating operations offshore, they're continuously seeking new global locations while also at the same time managing current opportunities. So in effect, pulling their real estate teams in two different directions. BPO firms must anticipate this demand to secure contracts, and this necessitates the need for insights into global property markets, the ability to view alternative locations, as well as maintaining short and longer term lease opportunities. So Alistair, how do firms go about unlocking the strategic value in a proactive way?
When you consider the number of people that are moving, I guess the shifting sands of employees, the fungibility of the employee can be based anywhere at any time, doing whatever service. It's really flattened things out. But I think if you look at the cost to serve, the cost to look after your customers, and the reason why originally people moved offshore to lower cost locations, you're now seeing a situation where the speed of impact driven by factors like AI means that you have to be really up to speed with your property. You need to be able to turn on a dime, which has often been the case where people have wanted to ramp quickly for retail demand pre-Christmas. And these sort of things are what BPOs are adept at. But nowadays you're looking at saying that not only are we wanting to shift the country of destination, but we also want to shift the way that we're working with people, the hybrid approach, the work at home, the hub and spoke. So you need to be very, very swift in terms of making those decisions, and it impacts the bottom line greatly.
And within the BPO world, I see you've got several significant challenges, not least the advent of AI, but also staff attrition post-pandemic. So there's been a great flux within BPO organizations, as I understand it. We're trying to retain staff and train staff at the same time. So with that in mind, can businesses keep ahead of the competition by having spaces available on spec in the best locations, in short, to try and bring in the best staff?
The attrition question is enormous when you talk about offshore people working for you in foreign locations. Firstly, you have brand identification. You want to know that those people are working for a brand and that they feel part of the brand. So they are working on behalf of, whether they're a captive or whether they're an outsource operation. And the sort of people now that you're hiring are going north in terms of their capabilities, their experience, their maturity. So these people are going to demand more in terms of the sophistication of an office environment. They may well be pushing for a hybrid work from home approach, but certainly they would be expecting to move from the sort of environment that they expect from a brand as they would get from a BPO. And there's an absolute direct correlation between employee experience and customer satisfaction. So the satisfaction of your employees is critical. Where they are, where the building is, the location to transport, all of the things that today you would expect, which didn't occur before the pandemic.
For many sectors, they struggle to really relate their commercial property or office decisions to the bottom line. So for them, it's simply a cost. It's never really a value driver to the business. But to me, it sounds like within the BPO world, there is more of a direct relationship between the value you can generate within a contract and your choice of space and how it impacts your staff performance. Is that something the sector's kind of measuring up now and trying to look at data to better understand?
Yeah, if I've got the question correctly, you're looking at the bottom line and the impact of your property portfolio, your property strategy. And it is really critical because we're in, like most businesses, a hyper competitive environment. So the nickel and dimes are really quite critical. I would say that companies are very aware of the cost. I would say on average, 7% of your bid cost is going to be relating to the facilities that you inhabit. So it's not 20%, but it's still 7%, which can quickly become 9%. I think the issue is more about the centralization of the strategy, which means offshore operations are really listening to the global property people who are mostly based in the UK or the US. And in those situations, I'm not sure that they're properly costing the need for flexibility and the cost of taking long-term commitments when you could have short-term commitments, where you need to look at a space that you want for 1 year or 3 years, not 5 years, where you have a demand to close a deal, which I've recently experienced, which was absolutely down to working with a flexible workspace situation, which meant you could take the business, you could have people in and up and running within 3 months,
Yeah.
whereas doing it yourself probably would take 9 months.
From our experience of running BPO offices on a managed office basis in Asia Pac, what we've seen is there is actually a value driver based on the staff enjoying coming into the office, learning from one another, training and working together to ultimately produce a better performance across the lifetime of a contract. And this is for a kind of a captive team. Is that something that businesses are valuing more, and they understand that better locations with a better work experience ultimately produces better output?
Better locations, better work environments, better conditions. Absolutely, those are things that impact the success of the operation. Over a number of years, I've managed a large portfolio of properties and of people, and we spend a lot of time on the human element, making sure people are happy, because attrition is a killer because you've got unfunded training. So if you're losing people, it's a real problem, and you're starting to go negative very quickly. We did the best we could in terms of what were very long-term leases on buildings that were no longer fit for purpose. But we did have the element of, making people happy in what they were doing. I think those days are gone now. So with the Instant Group, with flexible workspace, you've got that ability to put people into environments that they love. Because if they go down the road and see somebody else in a wonderful environment that's closer to transport, that has better facilities, then they will jump. And always people have jumped for a very small amount of money.
Yeah. And do you feel, therefore, that the days of trying to build up businesses in former repurposed pie factories may have moved on a little bit from a sector basis?
Absolutely. I mean, those days, people expect a lot more than that now. And also where you are moving up the scale in terms of people's experience and capabilities and their lifestyles, you absolutely see that they want to enjoy where they go. When they start their work session, they're feeling good. At least you've got that one covered.
And one of the benefits of flex space or managed offices to fulfill this type of demand in the BPO world is capital expenditure. So when you go through a lease process, it's not just the time to find the location and move in, it's the high levels of capex both at the beginning and the end of the contract, which I'm assuming is difficult to marry up against your own BPO contract which you've signed with a client. And you're trying to manage those costs because it's high cost of setup, high cost of exit. So presumably Flex Workspace gives you options around that because you can amortize cost over the life cycle of a contract.
How do you manage the difference between CapEx and OpEx in a BPO, a captive environment, an offshore environment? It's super critical because somebody at group and corporate level needs to be managing and monitoring these things, and everything takes cash. The capex requirements, the funding requirements to do these things. The more flexibility you can have, the better. The more astute the finance operations in terms of understanding short, medium, and long-term views. I think we've too often seen in the BPO industry that they don't look beyond the current year, right? So they will take those early savings for the sake of what might be a disaster down the road. I think that data and levels of sophistication and operators in a flex workspace environment actually showing you what the situation could be means that you want to have all of those options on the table, and you want to work with somebody who can help you with short-term solutions which you can cost out properly. And make no mistake, these days I think the brands that are buying outsourced service will pay a premium where they know that outsourced provider is giving them a better location, better satisfaction. They're going to get better customer satisfaction from a better work environment.
In terms of the win within the contract and understanding the ultimate margin for a BPO business, how important is speed to service of being up and running, getting yourself in situ? The way I'm seeing it with the advent of AI and changes within the BPO market, speed and nimbleness are absolutely critical to be able to provide the service on a contractual basis.
Is speed critical in the global business service, outsourcing, offshoring business? Absolutely it is. Because I understand the business of supporting customers for brands requires generally teams of people who continually are scouring the planet for the best next location. And what they're looking at and what they're coming out to the market with is saying that we've picked up a new program, we've acquired this company, we've had a change of strategy, we're going to need another 500 people to manage something. These are our preferences. We're seeing a change in what we're going to need, but we need it yesterday. It's always the case in business, right? People are going to need these things. So speed to adapt is how I would put it. It's not speed to take on new premises. It's also speed to lose old premises. It's speed to reposition. And so again, when I talk about the fungibility of the employees, I'd also extend that into property, where you need to be moving all the time and you need a partner who is able to manage that portfolio effectively.
In terms of summing up and understanding how the future looks, what does it mean from the point of view of staff choosing to work from home? Clearly, during the pandemic, managing work from home was critical to all businesses because out of sheer necessity. But again, as I understand it, there's been a return to office in this sector to a large degree, and that number of people working from home to working flexibly is changing all the time. But where do you see it settling ultimately in terms of the BPO world and how employers view the need to work from home or work flexibly?
How will the ratio of work from home to what we call bricks and mortar settle down at? Well, it's a great question, because we went from 3% work from home in a BPO environment to 100% and gone back to 70%, and probably will settle somewhere around 30% work from home. In an outsource environment, this is driven by the brand, who might specify where they prefer their employees to be, or they will tell the outsourcer, we wanted 100% in bricks and mortar. So you're at the mercy of your next client. And if you've got a pipeline of business, all options need to be available.
Excellent. Alistair, thanks for the insight on the second of our 3 podcasts. Clearly, speed, agility, nimbleness around planning to understand where and how you place your business is critical to BPO success. So thanks for your insight.
Thank you.